Just to recap a bit on the Chinese economy, we've looked at where the economy is at the present time and the changes that have been going on. Certainly, China's demand is taking off. We're seeing a rise in the middle class. But we're interested in what's influencing and driving this particular demand. What will it look like? What local industries in China are likely to grow with the rebalancing and the restructuring that's taking place? What does this present in the way of market opportunities for companies in Australia or in other parts of the world? Certainly, as we saw on the last slide, consumption has been growing in China. China is currently the 5th largest consumer market in the world, behind the US, Japan, the UK and Germany. But relative to its population, China punches well below its weight. Consumption to GDP, or if you like, consumption as a share of total output in the economy, is well down compared to other economies. As we saw in the previous session, it ranks about number 90. Income per share of GDP needs to rise. Wages need to rise. Jobs are needed if the authorities are to meet their goal of driving demand, having demand underpin the growth that's necessary. So what will drive this shift and what will it look like? If we think of the modern Chinese consumer, the Chinese middle class, what we see is a demand for much more complex goods, much more complex services. Quality and safety along the supply chain are essential. They're very important to the Chinese consumer. Brand is important. In particular, luxury end of the market is important in China. Changing dietary habits are shaping shifts in consumption patterns. Increased leisure time for more Chinese means that they'll be doing more activities such as tourism, sport and other recreation activities. So we're seeing, in some senses, the consumer moving towards the Western style, the Western model of a modern market consumer, but certainly there will be Chinese characteristics. In a simple sense, we can think of the Chinese consumer market as comprising an older demographic. As we've seen, the population is ageing, but there's also a much younger modern market segment. Young people in China who were born after 1978, they've never known the old system. They've never known the lack of goods. They've grown up in a time of relative plenty. Related to that is the growing number of high net worth individuals in China. There are very, very many wealthy Chinese. What this means, amongst other things, is they have high spending power, but they're also looking for ways to invest their wealth. And there's a burgeoning market, a growing opportunity for wealth management products in the market. So what we see is that the strategies that used to focus on mass distribution, standardised products for a big consumer market, that all needs to change. Just as an example, we see Yum Brands, which owns Kentucky Fried Chicken and Pizza Hut, is now making more money in China than it does in the US. The growing number of cars in China means that McDonald's is devoting more and more of its restaurants now to drive-through restaurants. Asian fast food chains generally are booming in China. If we revisit the 12th five-year plan, 2011-2015, and look at some of the priority industries that have been identified, we see that there's a major emphasis on environmental protection and energy saving, energy efficiencies. Also emphasis on biotechnology and China moving up the value chain towards more high-end manufacturing, away from low assembly work, labour-intensive, low-skilled labour-intensive assembly operations. So we're looking at a China that's attempting to modernise, but it's doing so under the constraint of resources and environmental concerns. Some of the industries that are likely to benefit from this restructuring and the accompanying urbanisation that's occurring in China include tourism, agricultural industries, pharmaceuticals, many industries related to the environment, construction, education, healthcare, the ageing population, and transportation and logistics. A lot of the infrastructure that's going to be related to the urbanisation which is occurring. As we've seen in China, about 20 million people a year are moving into cities. Related to this discussion, Austrade, the Australian government organisation, has identified a list of industries which are likely to benefit from what's occurring in China. This link here, austrade.gov.au, provides an opportunity for you to go in and have a look in more detail at the discussion about these particular industries. A number of opportunities have also been identified which parallels the discussion of Austrade. This is by the Australia-China Business Council. The publication Beyond Tomorrow provides a number of industry profiles. Also, an upcoming detailed report by Deloitte Access Economics provides a discussion of particular industries which are likely to be benefiting from the changes taking place in China. So a number of organisations, a number of institutions, private sector, public sector, are discussing the opportunities and the potential for particularly Australian companies into the Chinese market with the changes taking place. So there's plenty of opportunity for you to peruse this material and have a look for yourself. The references are provided in the resources for this week's activities, as well as some links given in this particular presentation. It's instructive to look at the way that services are traded. We focus on services because this is particularly an area where Australia is like to have a very strong comparative advantage and considerable opportunity in the market in China. One way that we can distinguish or differentiate between merchandise trade and services trade is to look at the different modes of delivery. And this is one particular classification which is useful. We can think of a situation where, for example, the provider does not move. In other words, the supplier of the service does not move, and neither does the user of the service or the consumer. So, for example, in things like separated services, such as software, books, films, we could include there such things as design. So, for example, you have a consultant, an architect, an engineer in Australia working for a Chinese client. Use of the internet, use of telecommunication services allows for the product, the exchange to take place. Alternatively, there may be a situation where the supplier does not move, but the consumer moves to where the supplier is. And clearly, such services as tourism, education and health may fall into this category. So, for example, Chinese students will come to Australia to study at Australian institutions. There may be situations, however, where the supplier of the service moves, and this could be a temporary shift, what's referred to in the jargon as movement of natural persons. So, for example, a consultant or a business person may move temporarily to, say, China, deliver a service and receive a fee, receive payment, and then return back to Australia. However, quite often the provider moves on a more permanent basis, and this is where service trade is very closely linked to foreign direct investment. So a commercial presence may be required to allow the trade to be delivered. So, for example, again, say in education, an Australian university may set up a campus or some partnership arrangement in China. A bank may need to establish a branch or a joint arrangement with a local bank in China. An accounting firm may set up an office in China. So we can see in this particular example where things that prohibit or restrict foreign direct investment can have a severe impact on trade in particular services. The other thing to note when we look at this particular typology is that the sorts of barriers which restrict services trade are very different to the barriers which restrict merchandise trade. So, for example, it's not a matter of tariffs and quotas and other sorts of restrictions at the border, which, for example, will impact on shipped products. The sorts of things that will impact on services trade would be whether a particular country recognises another country's professional qualifications, allows professionals to practice or conduct their business, whether it will grant licences, for example, banking licences to foreign companies, whether it will allow foreign education providers to enter into the market. Things that restrict visas, for example, will impact on tourists. Things that impact on being able to travel. So, for example, flight availability, the capacity of airports, flight schedules, etc. To the extent that these things are poorly developed or lacking, then it's difficult for either consumers to move or providers to move and therefore exercise trade and services. So this is quite a useful topology to look at a range of issues related to services trade. So we see now some of the traded services. If we look just briefly at this range of traded services, business and legal, finance, computing, so on, we can think where these particular activities will fit into the typology we just looked at, and we can think of the sorts of things that prohibit or restrict the ability of these services to be traded. What we'll do now is briefly look at a few specific industries, a few specific sectors, and identify some of the issues. Certainly Australia, in the case of tourism, has a comparative advantage. It has proximity to China. It's considered a relatively safe market. There's plenty of attractions which are of interest to the Chinese. And there's growing access in terms of better flights, more regular service for Chinese consumers to move down to Australia. In 2012, there was a record 626,000 visitors from China to Australia. It's Australia's fastest growing inbound tourism market, with tourists spending about $4.2 billion in Australia in 2012. According to Tourism Australia, it's expected to grow to a $410 billion market at the end of this decade. I mean, quite startling figures. But certainly the Chinese are increasingly active, not only in Australia but around the globe in terms of their tourism activities. With the ageing of the population, there's certainly going to be increased demand for health and medical services, drugs, medical equipment and so forth, but also increased demand for pension-style products and financial services, again an area where Australia now has much experience and a competitive advantage. Well, as we've seen, education is Australia's fourth largest export, and the Chinese students who come here comprise a large portion of that. In terms of students from China to all markets around the world, we're third behind the US and Japan currently. It's estimated by Access Economics that the average international student enrolled in the higher education sector in Australia spends about $34,000 on living expenses. So, with the sector employing around 100,000 people in Australia, it's certainly an important and an area which is likely to expand and to grow. An important aspect of that is the path to residency and the visa arrangements, as we discussed earlier, where there's problems with access for consumers, in this case in the education market, then there's problems or restrictions for the sale of that particular service. And certainly for education to bounce back, as we saw earlier, the education export industry has gone down over the last few years, but it's expected to pick up. And part of that will be the need to revamp the current visa arrangements. Certainly there's going to be opportunity in the information and communication technologies area. These products are among Australia's top 10 exports and constitute around about 2% of our total exports. And China is a growing market in this area. And with China looking to move to a much higher technology level, they're looking, as we said, to move away from low-end manufacturing, then certainly they're going to be looking at more technologically intensive components and other intermediate goods, and Australia could be well served to operate in this market. When we look at the question of the environment, then certainly there could be a range of opportunities for Australian companies. China's looking at moving environmental protection to a key industry area, and the spending in this area is going to be quite staggering. So in terms of such things as energy-saving equipment, recycling, LED lighting, and, there's a whole raft of areas where there's opportunities for Australian companies into this market. As we've already touched on, financial services is an area where there's likely to be increasing growth and into a range of different areas than exist currently. Certainly the Australian banks are well established in China currently, albeit with some restrictions imposed. But with the new free zone that's just been announced opening in Shanghai and surrounding area, there's going to be considerable opportunity, although the details are not fully clear at the moment. There should be considerable opportunity for banks and other financial institutions to broaden out their operations in China. And certainly, again, as we've mentioned, wealth management, private banking, there's likely to be a growing demand in that area from high net wealth Chinese. As we've noted, China is restricted in terms of its agricultural potential. Its arable and productive land is in relatively short supply, and with urbanisation, land is being increasingly encroached upon. Couple this with the changing dietary habits of a rising middle class, particularly into areas where the production is much more land intensive, so we're talking about meat and other cropping, then Australia is well placed. Currently China is our largest export market for agricultural products. It's number 4 market for our beef. It's also a growing market for lamb, mutton. Dairy is an important part now, growing part of the Chinese diet, which wasn't traditionally the case. Oilseeds, wine is a growing market, and not just the high-end luxury end of the wine market, but also the mid-range, the sort of market that Australia can tap into. we have wine which is becoming more part of the regular diet of Chinese rather than something that's traditionally been reserved for celebrations and special occasions. And the increased demand for protein and the growing middle class suggests that as a wheat market, China will eventually surpass Indonesia as our major market. Mining, we've already looked at in some detail the importance of this sector to the Australian economy, and the mining companies are very well enmeshed with their Chinese consumers, their Chinese customers. But what's interesting, and this is highlighted in the Deloitte Access report, which I referred to earlier, gas is going to become increasingly important as an export, not only to China but to other countries. But given China's environmental concerns and its growing demand and continuing demand for energy, then this will be an area where there's growing opportunity. As we saw with the mining sector, there was an earlier investment phase, and now that sector is moving into the export and supply phase. So it is with gas. Gas is currently still in a very ramping up phase, a lot of investment going on, but it is expected that by about 2017 that the sector will be moving into a similar sort of operation that we're seeing now in the mining sector, with a lot of export and supply taking place, or increased levels of export and supply. Looking at the exchange rate, this is a critical variable which will impact on Australian exporters and also importers. A weaker dollar, as the renminbi strengthens, will play into the hands and be favourable for Australian exporters. However, it does mean that imports from China will be relatively more expensive, which will be a benefit to those companies who are competing against Chinese imports, but it does mean if you're buying machinery or equipment, or if you're buying final consumer goods from China, they will be more expensive as a result. We'll be touching on inbound investment and investment generally next week, but certainly investment coming into Australia does present opportunities for partnerships with local companies to leverage the connection and to export into the Chinese market. And an aspect of this is the considerable Chinese diaspora which exists in Australia, numbering around about 860,000. Just to reiterate, as we've seen, Australia-China trade relationship, China is Australia's #1 trading partner, and that's spread across goods and services. What will be of interest to all companies in Australia will be the developments with regard to the Australia-China Free Trade Agreement. The current Prime Minister is very keen to push ahead with this and has made recent mention of the fact that he would like to see this concluded by the end of 2014. Certainly the details need to be hammered out, but this would be very favourable, certainly in those areas we've discussed, making it relatively more attractive for those companies to enter into the Chinese market. There will be a give and take, of course. Implementation will be needed for encouraging more foreign investment into Australia, as well as having opportunity to move into China for Australian investors, and this could be still a contentious political issue in Australia. But certainly it's an area that the Chinese are looking for some movement. They would like to see better access for their investment into Australia. The Australia-China Business Council has a number of industry profiles, and these are available at this website that you can see, the content.udo.com website, Australia-China Beyond Tomorrow. The Australia-China Business Council also provides a lot of detail for companies looking to export or to import. There are a number of resources too which are available. which provides data relating to accounting and legal issues, getting permits, registering property, etc. A lot of the nuts and bolts and day-to-day issues associated with doing business in China. Well, this week in our discussion, we'll be looking at some of these issues. Certainly, I hope you take the chance to look at some of the materials that have been provided and to do a bit of digging, perhaps into specific sectors or industries or products which may be of interest to you or that you want to follow up on. So I will be talking to you hopefully on Friday. I'll be in Hong Kong, and it'll be a good opportunity to speak with everybody then.